So is it going to be jobs that is going to dominate what the market does this week? Or is it going to be Fed Chairman Powell? Once again, everyone's so interested in what the Fed has to say and what their vernacular is. And are they becoming more dovish, indicating a rate cut sooner rather than later? Or is it going to just be overwhelming inflation talk? That's what we're here to talk about. My name is Kevin Weedmark, aka The Mortgage Mouth, bringing to you every Monday the week ahead, where I discuss what I believe are the top three things that have the potential to move the market. So let's just dive right in. And as I said, the number one, in my opinion, is jobs. If we look at this week ahead, it is a plethora of jobs information from, if I add this Outlook calendar, we have tomorrow JOLTS job openings. We have on Wednesday ADP. On Thursday, we have non-farm payrolls, the big daddy, as well as the unemployment rate. So you can be sure that traders, the Fed, all eyes are on this data. And the reason that it's so heavily on this, because if jobs start to pull back, and I've said it here before, it's a lagging indicator. So I think we're already there. Jobs are going to follow. But once we start to get the data, what it means is there's going to be less consumers to buy goods. Less jobs means less money. They feel a little bit more insecure. Even people that have jobs, they become a little bit more nervous. They become tighter with their cash flow. And what that's going to mean is, as we said before, the 2/3 of GDP. That means how healthy is the economy. That means a slowing economy. That means that they need the Fed to cut interest rates. So number two is going to be really interesting to see, what does Fed Chairman Powell have to say this week, right? That is one thing that everyone's going to be looking at. After last week, we had somewhat of a dissent. We had three Fed members come out, indicate that they thought possibly on the table was a July rate cut. Again, I stand here today, and I've been saying it since January. September is our first rate cut. They will do it whether it's the right time or not. And it's going to be a little bit more political. It's going to be a little bit more pressure. There's going to be several economic factors pushing at them. But I think they're going to do it just out of necessity, that they need one. They feel it's just right to give one, whether the data supports it or not. But last week, Chairman Powell spoke, and he seemed to be a little bit more dovish as well. He wasn't as much outspoken as the other three members that were like, oh, July is going to be the first rate cut. However, he himself also became a little bit dovish, meaning that he believes that a cut is coming sooner rather than later. So I think that's the second thing that really has the potential to move the market, and that's tomorrow. And then the last thing, I know we had inflation data last week. PCE came out. It was 0.1% higher than what they had forecast. But inflation is starting to creep back into the picture, right? So that's number one. There's no mistaking about it. The data is indicating that. But given that the tariffs are out there, I think there was a lot of expectation that it would be worse than it is. So that's why we're not seeing a clear, like, panic button yet. However, we do have the administration this past week, although I see a change now today because I'm cutting this on Monday. Canada pulled back on that tax. They want to continue talks. But again, these tariff talks, everyone is expecting the best. Who knows what it's going to be? We don't know. So the effect of the tariff thing is still out there. It's still in the balance. And the biggest thing that I think is this beautiful bill. Look, I'm not a fan. I think anything that adds just trillions of dollars to the federal deficit when we have a spending problem by the federal government is an issue. We should be just being cost cutting. That's all it should be. I don't care where it is. We should be trimming fat, because government debt sitting at what, $37 trillion is highly inflationary. It will sink the battleship, folks. It needs to be addressed. And the fact that we want to just add more and saying that, well, let's add more now so that we can do future cuts. And so I've heard that before, right? And where has it gotten us? $37 trillion in debt. So I'm not a fan. And I think that that is something that's going to be weighing on the Fed, because should they cut and inflation spike again, that could lead to long-term inflation. And dare I say the word, which is the Fed's biggest fear, stagflation. Stagflation is really slow labor growth, really slow economic growth, rising inflation. That combination is a huge problem. And I think in the back of the minds, of the Fed. That is a fear on top of, I think, Fed Chairman Powell, knowing that his days are numbered, does not want to go out. I hate to say this. I think every part of government is political, does not want to go out on a bad note. He does not want to be the one that pushes the government into stagflation, that pushes the economy, I should say, into stagflation. He doesn't want that as his legacy. It's his biggest fear. So by sitting idle, he's buying time. He's buying time to see what this economy is going to do. But it's classic Fed reactionary shit, right? They're never proactive. So we're getting the same old song and dance. The other things that I really am keeping my eye on this week is it's month end. Today is month end. So we could see some volatility this afternoon. I mean, if I look at the 10-year treasury right now, it's down another half a point with no clear data today other than Chicago PMI, which came in light. Okay. So that's good from an inflationary standpoint, but it's not earth shattering. It didn't miss it by much. It's been in the 40s for quite some time now. So it's not necessarily growing, but it's not something that, to write home about. So really what is moving today is just everyone has this feel that Fed rate cuts are coming sooner rather than later. The political pressure is on. And they're going to keep the feet to the fire, hoping that they get one. Honestly, before inflation once again potentially rears its head, which is sitting in the back of the Fed's mind. The other thing that I think plays into this is it's a short week. We've talked about this before. Friday's a federal holiday. Thursday, the market closes early. You essentially have 3.5 days of trading this week. And when you have that and you have people leaving on vacation, because a lot of companies have given Monday off due to the federal holiday on Friday, you just have less traders on the floor. Less traders means that those fewer traders that are there can really move the market. They can move it quickly, they can move it dynamically, and they can really influence interest rates on a moment's notice. So again, I always stress these peaks, these valleys. Once again, I'll bring this back up. These peaks, these valleys, right? We're in somewhat of a valley right now. I would not hesitate if you have a closing coming up within the next 2 or 3 weeks to seriously consider, talk to your mortgage professional about locking. What are current interest rates? What do they think you should do? I know all the talk is about lower interest rates are coming. They're coming. They're coming. But all it takes is that one little tweak. And as you can see, we could be spending a couple of weeks with higher interest rates and you miss that boat. The last thing, obviously, I put out a newsletter. Here it is. This is the front page. The 3 things that I talk about that we just talked about that I think are the highest things to move the market. I emailed out. If you would like to be added to that distribution list, just let me know. I can add your email. It'll come to you every Monday with the week ahead and every Friday with the Friday wrap up. All right, y'all. I hope you have a great week. If I do not talk to you, please have a wonderful and safe 4th of July. As I like to say, let's blow shit up on Friday. And don't forget, and please hit that subscription button. Every day I come to you with the daily dose. So that's a quick 2 minutes of what happened that day in the market, how it affected interest rates, and what do I think will be the play into the following day. All right, y'all, have a blessed week. I hope everything goes well for you. And should you need anything, please do not to call, text, or email me. I loan in all 50 states, and I would love to hear from you. All right, y'all, have a blessed week. Cheers.